Good morning, traders, and welcome to BCI's Morning Market Outlook. Let's take a look at how the markets are shaping up today with attention firmly on US policy uncertainty, commodities, and FX moves. The dollar has found some safe haven support as risk appetite weakens. Political noise around the Federal Reserve, including debates about its independence and policy direction, is adding to uncertainty. Treasury officials' criticism of past Fed decisions has done little to calm the sentiment, and legal disputes around the central bank are further clouding the outlook. This week's US data slate is heavy, with manufacturing and services numbers ahead of Friday's non-farm payrolls, which could help shape the September policy call. On the charts, the dollar index has rebounded towards the 98 mark, climbing above key moving averages. Resistance remains in the upper 98.7, 98.8 range, while downside support comes in just below 98, with July's lows near 97 still in focus if bearish momentum picks up again. Next up, let's talk a bit about WTI crude oil, which pushed higher to around 65.5, building on yesterday's gains. Supply risk remains a key driver, with fresh concerns over Russian crude flows following strikes in Ukraine and talk of potential secondary sanctions from Europe. India's stance on Russian imports is also under watch. On the demand side, a private survey showed China's manufacturing sector expanding at its fastest pace in 5 months, giving the markets some relief on consumption trends. Still, worries about oversupply linger, keeping investors cautious ahead of the OPEC meeting later this week. Technically, crude touched a near 1 month high of 65.7, with momentum indicators firming. Resistance stands around 65.76, while the next upside test sits near the 200-day moving average around $67. On the downside, 64.30 and then 63.30 are key support levels to look out for. Next up, let's have a look at gold, which surged to a fresh record high above 35.40 on Tuesday. Expectations for a Fed rate cut this month, with markets pricing in around a 90% chance of a 25 basis point move, continue to support the metal. Safe haven demand is also being driven by questions around the Fed's independence and lingering tariff uncertainties. From a technical perspective, gold's break above the long held $3,500 ceiling marks a major bullish milestone. Momentum is strong with RSI in overbought territory, but still supportive of further gains. As long as the $3,500 level holds as support, traders will be watching whether the rally can extend into the $3,550 and $3,600 range. Lastly, let's have a look at the Australian dollar, which has eased back towards 65 cents after 5 straight days of gains, pressured by a renewed dollar strength. Uncertainty over US inflation and Fed policy has weighed on the pair. Although expectations of a September rate cut in the US remain firmly priced. On the domestic side, Australia's July CPI rose 2.8% year on year, which is hotter than expected, and reducing the odds of a near-term easing by the RBA, which has offered some underlying support to the Australian dollar. Technically, the Australian dollar remains above the key 65-cent levels, suggesting the broader bias is still constructive. Resistance lies at 65.68, and then the psychological level of 66 cents, while the main downside focus is around 64.55, which is a 100-day moving average. Well, to sum it all up, the dollar is firmer on safe haven demand and Fed uncertainty. Crude oil is supported by supply risk, but capped by oversupply concerns. Gold has surged to record highs, and the Australian dollar is consolidating after a strong run. With the US jobs data and the OPEC meeting still ahead, volatility could still stay elevated throughout the week. That's all for your morning market outlook. Wishing you a strong trading day ahead. As always, manage your risk and happy trading.